You have the projections for production to swell here still to the rest of the final quarter of the year.
Hi again, everybody. Welcome back to the Comstock channel. I'm Marlon Bowling with you. It's always a pleasure to have you with us. And we really encourage you to go ahead and like these videos and subscribe to the videos by clicking the bell icon down below. And we love it when you share these interviews with others as well, because that's how we get the word out. That's how we continue to grow our audience. It's all thanks to your help. So continue to do that, and we thank you for every time you do it. Well, today I want to bring on Joe Camp of Comstock Investments. We'll take a look at the markets at midweek. And it looks like maybe in the grain case today, we had a bit of a case of a failure maybe in the soybean trade. Corn and wheat, maybe not so bad, but what happened to the beans?
Beans, after an early upside attempt, failed, as you put it, at the close, particularly falling to new session lows there at the end and making for an outside day down on the charts, poking, below some measures of what you call quite volatile in the very short run, but also, now close, but not yet testing those contract lows from earlier in the summer. You've got continuous chart lows from where the September bottomed out, down just below 940. Below that's the even money mark, $9, and some lows from 2020 and 2019. But you see how this recent downturn, the more than 50% in corn and soybean cases, as we were talking about the different retracement levels on the charts. For wheat, holding a little bit better relatively. We know wheat's somewhat separate in terms of the fundamental dynamics going on with the row crops, corn and soybeans, in the middle of the U.S. harvest, but all around pretty well negative compared to the way we started. There were some upside attempts for the corn that were more material even when the beans were falling, and that could be some of the back and forth spreading yet. Same with the outside help from wheat doing its thing here, but technically starting with the soybeans really negative, and that extends the same to a just slightly lesser degree for corn, and same for wheat.
Have you picked up any indications that the funds are going back to short positions again?
Yes, that's what we'd suggest is occurring over the last almost week since the report captured. You have the downturn as sharp as it has been, and including those technical failures of sorts that have happened along the way, like before today's weakness, the drop below $10 for nearby soybean futures, the failed attempt early this morning to try to move back above that before they turn lower pretty quickly. You have that likely encouraging those speculative funds with their computer algorithms directing trading strategies to jump back in. But this is a very important topic because it can also be the case that the latest selling has been inclusive of speculators returning to being more bearish on the net, but more so that it's been commercial hedge pressure, harvest pressure, selling from the farmers out there that ultimately have comprised the bulk of the downside pressure here lately. And if that's the case, then we can look around and see where the net is on this managed money position for the grains, and probably see that comparative of where they were last time when they were this net short. We're at much lower prices, and that's not to preclude them from turning short again. It is, though, to say there's less to gain than the last time they had covered these big short positions and had the opportunity to jump back on the bearish bandwagon. The alternative case can be that we get past all of this harvest selling. We could talk about the crop progress numbers, and where we're at on harvest is obviously very important. And you get beyond that, the speculators may look around at where the prices are relative to where they've been previously, historically, and they can find other reasons now to be buyers, potentially because they know the crop is put away and the farmers are likely to turn tight-fisted again eventually on sales, and they'll turn into buyers with more of the rest of the market. If that's the inclination, then that's why these trader positions and monitoring them are so important right now. And that's the feeling for me lately, is that speculators encouraged to get back to being bearish, but maybe not yet as much in as much of a big way as they were before.
Now, it would suggest to me that maybe farmers kind of looking for the bright silver lining here, but it looks like maybe producers did take advantage of the rally and do some sales into that rally to reward it. That would be a good thing, right?
That is evident. It looks like in the numbers, again, tracking trader positions, you're watching the managed money crowd, the speculators, but also those commercial producer slash merchant net short positions and what they say about particularly farmers selling at harvest. And recent numbers, at least compared to recent averages a year ago, when we know they were very, very stingy with letting go of the corn crop, it looks like they're not as much inclined to be holding back in a lot of areas, particularly the West, taking advantage of the good basis. In some instances, still having a tendency, which flips modern trends, of wanting to hang on to more soybeans. And this is also a dovetail and a follow-up from the recent grain stocks report that did show the farmers transferring a lot of that held back corn into the market on that rally that had occurred in the run-up through the majority of September. So yeah, that can be a good thing for the market, that we clear a lot of the selling pressure. We're going to be past the halfway mark nationally on corn harvest, and the way the weather looks, really putting it away quickly.
There is a big 800-pound gorilla in the room, and that would be the monsoon season in Brazil. The rains have started, apparently. It sounds like a lot more chances of rain moving forward. That should be really good news for their soybean crop down there. And everybody's expecting a larger acreage again this year too, right?
Yeah, that's the case. And so it can be that we're not too disappointed, that we're not too heavily pressured by estimates rising, because they never really fell. Of course, not in the terms of the USDA being very aggressive early on with numbers. Of course, not ever inching hardly down lower on those old crop estimates that everybody else had called for so long. Beyond that point, it would seem now. So those estimates are going to stay high until we get further along and back to having any real threat of the drought returning again, or the monsoon season potentially dissipating because of, for example, the threat of a developing La Nina. Then it can be a different story. For now, I think fits with the rest of what the news has been turning bearish on the net for these grains, and all of a sudden livestock for that matter too. Just the broader ag market as we look ahead, because related to this story about what's going on in Brazil, of course, is how China is watching the situation and not wanting to be unhedged after the U.S. election, of course, coming up, quite frankly. And that's why we see in some of these later purchases that China is booking Brazilian beans past the first of the year, just in case. But they're comfortable enough with weather, it would seem, to book those Brazilian beans. And that then has been another bearish influence for the market.
I have heard a lot of talk about the fact that the soybean planting in Brazil was delayed enough that it's going to be a problem for the safrinha corn crop that would follow a lot of those acres. And I wondered, is that what is helping to prop up the corn market right now and keep it above the $4 mark?
That could be the case. We were discussing internally a lot about how the market doesn't seem to be really catching on to that. And of course, we've got the source and Matthew and his connections down in Brazil. And so we think a lot about that second crop. And we think too, because that's what happened last year for Brazil in a way. And it's what's happened in history to tell us that the threat is there, is because you get that second corn crop planted late, and then that monsoon season does shut off in a normal window, and anything that was planted late just doesn't have the time to develop and mature like it should before, as it did again this last season, dryness returns, and you have, like we had in many cases across the country, a real hot and dry turn late in the season that takes the edge off. Of course, not late enough in a lot of spots to take down our big yields, but it's something to compare and contrast, certainly, as the Southern Hemisphere enters their new row crop season.
Well, obviously, wheat has also been weaker over the past week, but it's faring much better than corn and soybeans. How come?
Because the international wheat markets, I think, are holding up better. You have for Russian and French wheat prices, catalysts lately that have sparked some upside. Internal politics for Russia driving the price higher with a closed doors, quote unquote, meeting to discuss the export floor, raising that by a considerable degree, and really for the foreseeable future, probably being a backstop for that market again, corn and soybeans don't currently have. You have, again, higher prices in the French market, which have had a lot of attention lately because of that country's crop being down to a multi-decade low. So it does fit with the theme that is different for the most part than corn and soybeans globally, in that northern hemisphere wheat stocks are declining into the new season again. I think down 3% from a year ago, down 6% over the last 2 years is the projection for world ending stocks for wheat. And for that reason, it's a more bullish picture right now, just relatively.
Well, and of course, we've heard the news stories where I believe multiple grain ships were actually attacked by Russia in the Black Sea region. And that has to make people nervous too. I believe one of them, I think the first one that was reported was actually from Turkey, which seems to kind of be a little friendly with Russia. And that was a bit of a surprise too.
That's always one big source of escalation, but it has been on the table for so long. The market, in some ways, gets tired of the broken record of you come in after the weekend and something like this occurs. Attacks on infrastructure at their key ports, or actually along maritime channels, like has happened lately. If more of that does occur, you have to think the wheat market only continues to respond to the upside, because that's been the problem. The flip side of that leading up to now is that despite all of those risks, those two countries, Russia and Ukraine, have grown a lot of wheat, and they've pushed a lot of it out into the world trade market to the detriment of competitive exports here in the U.S. So if that's going to occur and actually disrupt trade flows, then we could have something.
Anything in the outside markets really catching your attention before we dive into the livestock trade here? For one thing, I was looking at crude oil. It's had kind of a nasty week here. For those that are bullish on crude oil, it's really been struggling. But then you have markets like orange juice and cocoa and coffee. They have had quite a week, I think, on the upside. What's going on?
You've got individual stories, of course, if we're thinking about aftermath of the hurricane, and some of those soft commodities like orange juice are still international weather issues, extremes that have been affecting cocoa, coffee. There's a lot of volatility in the market as of late related to world weather. And I know that's always the case, but so extreme, it would seem, still in the present. And that's what I think a lot about in terms of the outside financial markets in general, in that it's always the case that it's important to see what the stocks are doing and how bonds look and are moving long term, and how they're impacting the dollar. But exceptionally at the moment, it is the case that, again, and it's been this point to different extremes in the past, where you can come in into the early morning, overnight hours, and I can look first at the stock futures, the crude oil, and the dollar index, and you can guess pretty accurately usually what the grains are going to be doing. And so that's the case here lately, that with the crude oil down $3 or $2.50 in single sessions, you don't have a lot of hope for the grains rallying. Today, the crude oil leveling off and being more stable, you would think that should be helpful for the soy complex. Of course, it wasn't. More negative were the other factors there, China demand, everything else. But it's really important right now with the stocks at close to all-time highs, waiting on this direction from that first full week in November. The now umpteenth time, not the last, that I'll bring up, how we're anticipating trading towards this big week, November 5th elections, and then 2 days later, the central bank decision on interest rates, and the Friday crop report following that. Who cares about that next crop report when all of the other stuff's going on? But the outside financial markets are a huge factor at a time when we'd otherwise be probably more focused than I think we are on the ongoing harvest. But that's important too. Still having the phone calls with guys in the combines and checking in and wanting to hear yield results and getting back to what we opened the conversation with and examining how much is being sold and how that interplays with the speculative features as well.
And again, we want to encourage everybody to join in the comments below these videos and post what you're finding out in the field, whether good or bad. And everybody can kind of compare notes with their own different parts of the country. It's always fascinating to see what everybody's finding out there. You mentioned the outside the economic picture, and that, of course, can be tied to the livestock trade. And the old saying in cattle is feeders are the leaders. If that's the case, they didn't look very good today. What is the deal with that anyway?
That's been the case, leading the way lower this week. The sharp move following through with some weakness today, and a sign of worry about the long-term futures outlook. There's futures on cattle, and then there's futures on the feeders. Even a longer-term type of view fundamentally being cracked potentially somewhat because of, I believe, a liquidation of speculative interest and risk-taking there ahead of this election, and the knowledge that we've rallied back towards these summer highs, in many cases not too far from all-time contract highs, at least for the nearby contracts. And so there's some, I think, risk leveling here, some hedging, and some ultimate pushback against the market that was evident maybe first in the feeders so far this week.
Well, lean hogs look kind of bleak on Tuesday, and then they put in a pretty good performance on Wednesday. Does that just negate that? What's going on with the hogs? That's a pretty volatile trade right now.
Right, and that would go back to saying, unlike the cattle, the hogs are an example of where the speculators are not ready to quit. And so we can see that the past 3 weeks straight, managed money traders lifting their net short on the hogs higher. We're talking now about approaching again near record type bullishness in some of the contracts that, because of the surge, all of a sudden now today look again very technically sound. We have the bounce from today's market, the close yesterday, holding up these nearby, some of these contracts, their 20-day moving averages, keeping the trend, and the settlements then yet on the current session, leaving them pretty close again to recent highs, and again, technically pretty bullish looking.
Do seasonal traders say this is the wrong time of year for that?
It would seem you have the projections for production to swell here still in to the rest of the final quarter of the year and early into 2025. That gets back to saying, well, it's a futures market, and the speculators are inclined to keep track of the cash and the current fundamentals, but also think about down the road what might be nice to own longer term. And when you do have eventually the topping out of production, and then the brakes still pumped by producers wanting to hold back on expanding the herd here domestically because of recently lower prices and all kinds of different other challenges, I suppose that's the fundamental motivation that goes along with the technical upside that we're seeing.
All right. Well, Joel, good to visit with you again. Thanks for explaining everything here at midweek. I appreciate that. That's Joel Camp. He is with Comstock Investments, and he's also involved with some of the comments that are involved in our premium segment. And you can check that out, too, for a month for just $1. All right, we'll call it a wrap on this one here. And for producer Brianne Hendrickson, I'm Marlon Bowling. We'll catch you next time right here on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.